All right, we're tracking another big story today. Hang on to your money, folks. The Federal Reserve is expected to raise interest rates once again today in this ongoing effort to combat high inflation.
And the anticipated rate increase will be the 10th consecutive hike since March of last year. Experts believe the central bank will increase rates by 1/4 of a percentage point or 25 basis points. Now, this move would boost the Federal Reserve's benchmark borrowing rate to its highest level in 16 years.
Joining us now is Rod von Lipsey. He's a managing director for UBS Private Wealth Management and can help guide us through what to expect. Rod, the latest consumer price index showed inflation is cooling, but folks out there will know prices still feel above average. They are above average. So to what extent do you think the Fed is considering that? You know, costs aren't really coming down quickly as it factors that into its decision.
Errol and Lana, good to be with you this afternoon. I think that the Fed has established its glide path, and it would be pretty difficult to change your destination when you're halfway into the descent. So we're expecting 25 basis points from the Fed this afternoon. And of course, we're all going to be interested to see what it is during the press conference that Chairman Powell says that he's feeling about the economy and what we can expect going forward. Many in the markets believe that this might be the final of this interest rate hiking period. And so perhaps we're there. But I don't think that Chairman Powell this afternoon is going to say, kids, we're there yet. I think we're still going to see lots of questions out there because there are mixed signals in the economy.
Yeah. And Rod, as you say, while we're all hoping perhaps that this is the end of it, we pretty well know that another rate hike is happening. And that's going to push the central bank's benchmark rate to its highest level in almost 2 decades. How is this going to be affecting our viewers?
Well, listen, remember that the Fed has had a mission to bring inflation, which had been the highest in decades, bring it down to a point that it is manageable, bring it to its target of that 2 to 3%. And we think that there's a lot of stuff in there that's still going to be sticky. Inflation is still going to be with us. We're not there yet. In fact, next week, our view is that the CPI is going to come in at about 5% year over year inflation rate. So that's still way above the Fed target. We're moving in the right direction, and there are many things that are moving in the right direction, but there's still some sticky things. So people who are looking to buy used cars or are getting gasoline, they're still seeing that those prices are high, and so consumers are feeling the pinch. The Fed's still got work to do. We're moving in the right direction, but we're not there yet.
And all this is meant to avoid a recession. What does your gut say? Are we in one? Is it coming? I feel like we ask this every week, but what's the latest on that?
Well, Errol, that is a really great question. I think a lot is going to hinge on where we end up when we look backwards on the Q2 numbers. The challenge with Fed rate policy and with things like are we in a recession is that those are based on data that's rearward looking. And so we won't know until we get there. Our current economic forecasts are for the final 3 quarters of this year, second and third or fourth, to have negative GDP prints. And if that's true, then we will have seen a mild recession in 2023, and that's still our view. But how that affects consumers and how that affects the markets, that's still a question. We could still see an engineering of a fairly soft landing to get where it is that the Fed wants to go.
Well, at least you're saying that to us in a calming, soothing voice. Rod, the silver lining for us today. Thanks for joining us.
Thanks, Rod.
Listen, my pleasure.
And a quick reminder for our viewers, of course, we're covering the Federal Reserve's interest rate hike decision live. You can find that at 2 p.m. Eastern today here on CBS News.